Hello and welcome to a new ATFX report. My name is Gonzalo Canete, and in this occasion, I'm here to share with you a full JPMorgan analyst to basically study what we could expect for the coming earnings, 11th of October. Let's share the screen first of all, like always, like usual, to show you all in detail. And let me remind you again, if you are not subscribed to our channel, please click on subscription and also click on the bell to receive notifications anytime we send you a new update on this channel on the relation with the market. Moving forward, let's keep going. Let's start with the expectations we have on for the Q3 on this 2024 earning release. 11th of October is the date. The expectation, basically, the average earning estimation is $4.04 per share. The revenue expectation is around $41.49 billion, slightly below the previous quarter. Project total revenue for the quarter reflecting growth in key business segments. We are going to take a look on those key segments in a minute, business segments in a minute. And the stock performance gained over 20% so far in 2024. By the end of this video, we are also going to analyze the charts to see what exactly is the movement of the price and what we could expect from a technical analysis perspective. Now, moving forward, JPMorgan just past performance and future expectations. Let's take a quick look on Q2, the previous one of this year, and Q1, just to let you know the result. It was above the expectations, and actually the performance of the stock has been really, really good in the last few months. But we are going to see all of this in detail. Let me minimize my screen there so you can see everything in detail. Q2 2024 performance, it was $4.40, the actual EPS versus the 4.19 expectation. So again, above the expectations, the revenue was $50.99 billion, 20% over year-to-year increase on the revenue. Investment banking revenue, $2.5 billion. 46% jump in relation with the previous period. So amazing, super good. Net income, $18.15 billion, 25% up, boosted by $7.9 billion came from exchanging Visa shares. Net interest income, the one generated in direct relation with the interest rates, $22.9 billion, 4% year-to-year, year-over-year rise. And in relation with the first quarter, Q1 EPS was 4.63 actual versus 4.18 expectations. So again, beating the expectations, above the expectations, and therefore everything seems to be in the line that in theory the results will be above the expectations for this year too. I mean for the next quarter too. Opportunities and risk and challenge the company has in advance. So challenge, potential economy softening and feed on growth tailwinds. We are actually facing in the United States what is called by Federal Reserve soft landing. Now, the main question is, are we really landing the economy in the United States, or is it still flying, or is actually going to be an emergency landing? That's the main question. Few months ago, the labor report from the U.S. economy was giving us the idea that maybe the U.S. economy was entering a strong recession. The last labor report, it was actually showing the opposite. It's still dropping the unemployment rate, which still is not in line with the expectation from Federal Reserve. And again, anything out of the plan should generate concerns because it seems that they don't control 100% what's going on in the U.S. economy. And that could cause interference on the price of JPMorgan. Net interest income tied to interest rate movements. And what is the interest rate movements? They are cutting the interest rates. That's the plan. So if they're going to keep cutting the interest rates, it means that the net interest income should be dropping in this regard. Consumer strength for higher interest rates. Still, if they are not cutting the interest rates, happy days, more net interest income. But however, it's also linked to the consumption of customers, clients, and therefore, for example, less credit, less loans used for consumption and sales and so on. Uncertainty surrounding by leadership transition because we got the CEO of JPMorgan in a process like the next 5 years, probably we will see the successor of this CEO. So James Dimon has mentioned already that he's about to leave the company, and then we don't know if JP Morgan is gonna do it so well after with the new CEO. So far since 2014, we will see now in the charts, the company has been doing amazing from a technical perspective. Persistent inflation due to fiscal deficit and global remilitarization could cause interference again in the global markets. Upcoming change in the capital requirements. Regulation related with financial sector that we have seen that in Democrat administration is more common than in Republicans. Let's see what happens. On the other hand, if the regulation is dropping, if they cut, like Donald Trump, for example, was suggesting to reduce regulation of financial sector of financial industry, could be a plus for JP Morgan. Opportunities consisting of performance and revenue growth. Things are going well. There is no question on that. You will see now the chart from also not just fundamental, but also from a technical analysis perspective. You will see that the price is strong. Strong investment banking performance, resilient net interest income despite interest rate concerns, which is good because the beta of this variable, the NII, it's showing us that is resisting really well the turbulence caused by the monetary policies from Federal Reserve. Strategic gains from recent move, like Visa Share and Exchange. Let's see a few projects, and we can also go to the charts. Branch expansion, plans to open over 500 new branches in 2027. By 2027, focus on new markets, including lower income areas and rural communities. So therefore, increased expansion and how far they can reach communities of investors to savers, like in Asia, for example. Hiring, plans to hire 3,500 new employees in conjunction with the branch expansion. Community centers, 3 new community centers branch planned for 2024, 2 in New York, 1 in Columbus, and 1 in Ohio, offering community events and financial health resource, particularly in more integration, social integration with communities, which is good after the contraction we have been seeing in the financial sector for the last few months. Now, net income, 2024 July forecast is good, and the expectations is they keep like approximately 91 million, increase for early projection of 89 billions, positive outlook in interest incomes regardless of the situation. Time to go to the chart. You got the chart on the screen. Let's see what exactly is the evolution. Since 2014 has been rising. It was breaking up new resistance, and since then we have been quoting about $55-$60 per share since then, and the top record, it was close to 225, 230, never there, but really close. It probably doesn't target $230 per share. We can also see that it's an uptrend and has been broken up, that uptrend, in a new top record recently over the last couple of months, and therefore we could expect that now $200, $205, $210 could be a good support for these prices. If we take a look in short term, what we can see is kind of bearish structure, which it could be shoulder, head, shoulder, but again, everything about $200, everything about $198, everything about $205, it clearly shows a strong support, and therefore that's why I believe we could expect that JP Morgan continue doing well. I also want to include you because the charts are so clear. The company is doing great. It's close to top historical records in terms of price, and therefore it seems to be really good and really strong. But also, if you take a look from a performance perspective, we can see that so far this year is the third sector has been doing super well. The financial industry has been moving almost 20% in returns over the last year, since the beginning of the year, which is super good. Year over year is 36.47% up, which means financial sector is doing well. But JP Morgan is leading that performance. Why? Because first of all, if you take a look here, it's JP Morgan is the top one, number one by Finbit.com, right? We can see the market capitalization is the biggest one, followed by Wells Fargo. By the way, Wells Fargo is also presenting earnings results this week, so pay attention to Wells Fargo too, because it could influence the sector, obviously. But Citigroup, Bank of America, Wells Fargo, and the king, which is JP Morgan Chase, is the one who is leading this movement. And again, I believe there is no question about how good it is going this company. If you got in the portfolio, you know what I'm talking about. Any movement back to $200, $198, $96 is again very attractive support areas to increase position by hedge funds, by private investors, and so on. I think that's all. I hope this report helped you. And again, if you are not subscribed to our channel, please click on subscription and follow us. Click on the bell to receive notifications. Take care and see you in the next market reports. Bye-bye.